Yes. So, good evening, everyone. I'm CA Yashanchli, the moderator for this webinar. And first of all, I wish you all a very happy Diwali on this auspicious occasion. We are delighted to welcome you all in this webinar being organized by Continuing Professional Education Committee of ICAI. It's my pleasure to be the moderator for the webinar on valuation as a practice area and practical aspects of discounted cash flow method. And the second topic for this webinar is how to handle ED cases in presently changed scenario. In a short while, we'll start with this webinar. First, I would like to appreciate about the CP committee's initiatives. The role of chartered accountants is evolving continuously to accept newer responsibilities in a dynamic global environment. The future of CA profession depends on being flexible and open to the innovation. Therefore, the need of R is to innovate as per the requisites of the contemporary business environments and accordingly upgrade the curriculum and education systems of chartered accountancy course. The committee also believes that members of ICAI should look beyond the traditional areas of practice and seek and explore new areas of business and profession. And hence, the CP committee is mentoring the members by providing guidance through various workshops, seminars, national conferences, background materials, etc. And simultaneously by encouraging young and dynamic professionals to grow as a speaker, master of ceremonies, etc. in CPE programs. The programs for this evening is as follows. We have two sessions, 1 hour each, and the topics are very interesting one. That is valuation as a practice area and practical aspect of discounted cash flow method, which will be delivered by CA Gaurav Sukija sir, is from New Delhi. Also, the second topic we have is how to handle ED cases in presently changed scenario. For this, we have with us faculty CA Dinesh Kumar Dwivedi sir from Surat. So I welcome both of our speakers to this webinar today. I welcome you, Gaurav sir, as well as Dinesh sir to this webinar. Our eminent speakers will talk about the mentioned two emerging areas of professional interest. So going further, for our first session, which we have with PA Gaurav Sukija sir. Sir, I would like you to introduce to all of you about him. He is a registered valuer under Indian Bankruptcy Code and has worked experience spread across provided valuation advisory, due diligence, M&A tax. He has done valuation for industries such as IT, startups, fund houses, manufacturing entities, automobile company, trading entities, and blockchain-based companies also. He has undertaken valuations of businesses, tangible assets, intangible assets like brands, patents, and customer relationship, financial instruments, and loan assets to assist client in the strategic M&A, litigation support, fundraising, corporate restructuring, etc. He has performed various roles ranging from audit, compliances to advisory, which gives him a view and understanding of overall operation of the company. So this is the brief about the sir. And now, sir, I would request you to start with your deliberation.
Thanks very much to Yash for moderating the session. Wonderfully moderated and started the session. A very warm, happy Diwali to everyone here. It's a very auspicious day. I was just talking to Akshat from CPEC committee, and I was saying either we'll have a lot of people coming in today, or we'll have a lot of people listening it tomorrow. But the day is very auspicious anyhow. To learn about valuations, to learn about anything at this moment of time is wonderful. वो कहते हैं जब आप सरस्वती के पीछे जाते हो तभी लक्ष्मी आपके पास आती है। तो आज जब लक्ष्मी का दिन है तो अगर आप सरस्वती ले लेंगे तो लक्ष्मी आपके पास अपने आप आ जाएगी। तो बहुत बहुत थैंक यू सीए दिनेश द्विवेदी जी को फॉर बीइंग देयर एज अनदर स्पीकर एट आवर सेशन and for Akshat for planning this and the whole CPEC committee here present here. So I'll start.
Thank you, Gaurav.
Thank you, sir. So I'll start off with very basic thing. Whenever I take this session, I first talk about what is valuation and why valuation as a practice area should be chosen. Yeah. So I asked everyone at all time. I wanted to ask Akshat, do we have chat box here? Can people chat alongside? No.
So we have
they can put their questions or the comments on the portal, and our moderators can convey it to you.
Okay, so it will be more of a one-way session, right?
One way, yeah, yes.
One. So it's not a two-way conversation. So no problem.
Right.
Gaurav, how
Definitely.
we'll go ahead is you deliver the session. Last 10 minutes, we'll have a question answer session where I'll give you the questions which I have received from the audience.
Sure. Okay, done. So let's start with the presentation directly then. Yeah. Is my screen visible? Yeah. My introduction is already done. I'm partner, national leader, transaction advisory at a CA firm, namely Kirtane and Pandit Chartered Accountants. You know, I first wanted to talk about why valuation should be chosen at this moment of time. You know, my journey altogether, while being in last 10 years or 15 years in the CA profession, I have seen all types of CA firms. So I'll talk about, I was in a Big Ten CA firm in Delhi while I started my articleship and all of those. I was part of the M&A team there. I saw how the practice is being developed there, how the things are being done. Over a period of time, once I became chartered accountant, I went to one of the big fours. And I was part of one of the big four in the M&A team again, and I was taking care of various things. I was there building the team all together from the scratch in Delhi. Yeah. And then from there, I started my own firm with four of my friends, which was a tier one, mid tier CA firm. And then at the last, I ideally went out to merge my firm into Kirtane and Pandit, and now we are amongst, again, not talking about what the numbers or ranks are, but again, one of the big CA firm in the country. Yeah. So what happens in all this is that I'm not connoting anything like big or small, but I've seen how a CA firm with 36 partners or number of employees works around. So you need to create a niche of yourself. Until you don't create a niche for yourself, you will never be able to gain in the market. So, what is very, very important is that the niche should be in any area. It could be GST, it could be income tax, it could be valuation, it could be transaction advisory, it could be PMLA, it could be one section of Income Tax Act. That's it. You do not have to work around on the whole of the Income Tax Act. You do not have to work on the whole of GST. You have to work on one section, be excellent in that section, and do the best in your life. Yeah. So now valuation is needed because a lot of regulators are behind a lot of auditors, a lot of valuers, a lot of you know GST consultants, and everyone like that. You need to come out of the plethora of the traditional services you have been giving. You need to come out and understand that there are a lot of things in the market which people are doing, but you are not able to take the benefit of that. Like, for example, valuation is one of them. Whenever you start with one service of valuation, you come along with few more services. So, for example, let's say the valuation is for the purpose of issuance of shares. Yeah, I am a registered valuer. Under Companies Act, the valuation is needed for the purpose of issuance of shares. Whenever the valuation comes in, alongside comes a due diligence assignment. Once the acquisition is done, then comes a purchase price allocation assignment. So you need to understand that one assignment is not a standalone assignment. It is about a transaction advisory altogether. If you're part of that transaction advisory, you will be amongst those people who will be thanked at the end of those transactions. Now, a lot of people do IPO. IPO is the buzzword right now, though the markets are going haywire. But the IPO is the buzzword right now. So everyone at any moment of time is thinking about the first question which comes in the mind of the IPO guy is, what money will I get? And at what valuation will I get? So the first initiate, the thing which initiates the seed of the IPO is that they will come to the valuer for the first time and they will ask, Gaurav, could you please value my company and let me know that what is my valuation, an ethical valuation, an optimal, prudent valuation at this moment of time, which I could ask to the public and I could dilute maybe 25%, 30% whatsoever. That is their choice. But what is the valuation right now? That's the first question which they get. Yeah. Alongside the IPO and a lot of those things, the valuation can be of various areas. When one company is merging into another company, you need to give a swap ratio. आपने देखा होगा, recently there was a demerger of Reliance, wherein they demerged Reliance Jio and Fin from Reliance Industries Limited. So you all got shares of Reliance. So that was a demerger. So merger, demerger, capital reduction. These are one of the most used lines in the case of valuation. Second, in the case of it is IPO, then it would be acquisition. So it is when you are acquiring a company. So I take a lot of sessions on M&A tax also. When you are acquiring a company, you will either do a merger, or you may choose to do a slump sale, or you may choose to do an IP, maybe itemized sale. So, for example, what happens is, I was recently doing a due diligence some time back, and I saw that the company was very lethargic in doing the compliances over a period of time. So while the company was very lethargic, their consultants did not give them the right advice and all of those things. They could not do the right compliances at the right moment of time. Now, because they did not do the right compliances at the right moment of time, their due diligence did not go past. It did not pass. So the financial due diligence went off because the revenue recognition policy was wrong, the taxation was wrong, the GST was not done on time, the income tax was not paid on time. So we told them, the acquirer, that in case you want to acquire this company, why are you acquiring this company? So he said they have a wonderful software, they have a wonderful tech because of which we're acquiring, but they don't have any business right now. This is a strategic investment. We're acquiring them 100%, and then we'll create business because of this tech. So I said, instead of acquiring the company, you can actually acquire the tech, which is known as IP valuation, intellectual property valuation, or you can say intangible asset valuation. Now, then comes internal management analysis. Somebody came to me just 3 days back. It was quite funny. He gave me a call and said, Gaurav, I run a business which is of a kind of an OEM. They are very small product manufacturer. They said we wanted to get our valuation done. So maybe it was for the purpose of fundraising or any other case. I asked them, what is the reason of getting the valuation? So he said, Gaurav, there is no reason for this valuation, to be honest. I am getting this valuation done just to assess where I sit right now. So I said, is there a family feud? Is there an acquisition that's going to happen? Is there a transfer of shares that's going to happen? Or are you merging it with someone? Are you taking out an IPO? What are you doing? So he said, Gaurav, it's just an internal management analysis. Now, why I asked this question is because valuation is dependent upon the transaction for which it is happening. The valuation for a strategic investor will be different from a financial investor. The valuation is an art and science. Because it is an art, it is subjective to the valuer. It is also subjective to the purpose of the valuation. Now, he did not tell me the purpose of valuation. So we need to be very neutral when we do the valuation. Then comes valuation for the purpose of insolvency, which is Insolvency and Bankruptcy Board of India, IBBI. Then come Companies Act, RBI, FEMA, SEBI, Income Tax Act. Then there is a very big market of US ESOP valuations. It's a huge market, huge market. There are big players in the market who are currently doing valuations, and they do a lot of valuations for 409A valuation. The 409A, it's actually called 409A valuation because they pronounce zero as O. Yeah, it's zero particularly. So 409A valuations in India, there are bigger consultancy firms who are running the back end job or doing valuation directly in India, and they're doing millions of dollars as revenue from only 409 valuation. Even big companies are getting the valuation done from Indian companies. Then comes impairment analysis. It is generally for when one of the we all know when one of the companies is getting tested for impairment, and we believe that there are some internal and external factors for the purpose of impairment. So the auditor asks that you get the impairment analysis done of this company. So then we do valuation for impairment analysis. Then comes purchase price allocation. So let's say one company acquired another company. The company's net worth was just 20 CR, and he acquired that company for 100 CR. So what is ATCR? A layman would ideally say it's goodwill. You acquired that company, it was 20 crore, you acquired it for 100 cr, 100 minus 20, 80 cr. So ideally it is goodwill, but it's not goodwill. There's a lot of intangible assets in it. There is brand, there is customer relationship, there is supplier relationship. There is, I was recently doing a purchase price allocation for one company, which was the exclusive distributor of an FMCG company. Now, because they were an exclusive distributor to that FMCG company, which is because of which they have a geographical barrier, under which only one distributor will be sitting, and they were getting acquired by another person. So the biggest asset they had was the supplier relationship, because they had a 10-year supplier relationship with one of the so they had 10-year supplier relationship with one of the biggest FMCG supplier, without which they are nothing. Yeah. Then coming to company law, court order, mediation, arbitration, these are dispute resolutions. A lot of times there are family resolution which we need to work on. So I was recently working in one of the settlement wherein there was a divorce which was happening in London, and they hired us in India, and they asked that, Gaurav, could you please let us know what should be the valuation of the companies which I own in India. They're all unlisted companies, and there are a lot of assets which are doing a listed company. That's easier to do, but could you please give me that? And this valuation will ideally be used for the purpose of my divorce, discussions which are happening in London right now, which because they own company in India, but they live in London, so the divorce was happening in London. So that kind of things also come up. So there are a lot of reasons because of his valuation is there. Now, valuation is a very, very vast area. There are various valuation methods which you need to apply. People have heard of discounted cash flow method. People have heard of comparable company multiple, CTM multiple, but they're not just that. There are huge number of valuation options available. For example, there is relief from royalty method for the purpose of valuation of brand. There is multi-period excess earning method, which is used for the purpose of valuing customer relationship, supplier relationship, or any primary intangible asset. There is with or without method, which is used to value non-compete. There is Black-Scholes method, which is used to value the units, which is known as option valuation. There is binomial method, there is Monte Carlo method, there are a huge number of methods. But I'll come down to the very simple, the basic of the valuation, wherein we've already talked about why it is needed. It is needed for fundraise, for the purpose of FEMA, for income tax, for intangible PPA, for Companies Act. There is portfolio valuation. So we do a lot of portfolio valuations for, let's say there's a company in London or US or China, who have a lot of companies in India, and every year they need to get the valuation done for their portfolio companies. So we do the whole of portfolio companies. We recently did for one company in India which owned numerous companies abroad, which were in Singapore, Tanzania, Uganda, Canada, US, London again, UK ideally. Then they had it in Nepal, Bangladesh, everywhere. So we were doing the valuation for all the companies altogether. We do that as a regular assignment. So even in valuation, there is retainership. So it's not just that you get one-time assignments and you get done with it. There are transactions, there are conditions wherein they need to get valuation done on regularly basis. Yeah. So that is there. Now, how do we do valuation? So by this, presentation, I am not saying that you will learn how to do valuation. What I'm telling you here is, for example, you're sitting in front of a CFO or a promoter or anyone, you should only know how to talk about valuation. That's more than important. If you know how to talk about valuation, the assignment is one. And I'll tell you reason for that. The knowledge of valuation is very limited. And I'll tell you reason for that also. The knowledge of valuation is limited because it is not taught as an only subject when you're doing chartered accounting. There are courses like CFA which are focusing only on valuation as a greater aspect, but there is no other course which actually talks about only valuation. So you will not find people who are on the CFO, CEO, CMO, or CXO, any CXO, who would know a deep knowledge of valuation. Generally, they don't have. Yeah, they won't have because they don't need, because that's not their regular job. So if you know how to talk about, so let's say a CFO asks you, Gaurav, I want to get a valuation done. Can you tell me the process of the valuation? So it's very simple. You tell them, I'm going to look at your historical financials. Yeah. Then I'll broadly analyze the financial forecast. Why I will broadly analyze the financial forecast is because it is financial forecast. I am not doing the audit of that. I'm not doing due diligence of that. I do not own your financial forecast. I will broadly analyze them. Talking about, I will see that industry and all of those things. So we'll be talking about that in detail in the next few slides. And then hold discussion with management, conduct industry research, conduct valuation using appropriate approaches. And then I will prepare a valuation report and discuss the results with the management. This will be the whole process. So first I'll see the historical. Second, I will look at, analyze the financial forecast, hold discussion with the management, conduct industry research, conduct valuation using appropriate approaches, and then prepare valuation report and discuss the result with the management. That's what I'm going to do. Yeah. There are various basic valuation methods which one can choose from. For example, cost approach, market approach, income approach. But there has been a research by one of international big four, which talks about that the 58% of the valuations done in the industry for the purpose of regulatory or non-regulatory is done by our discounted cash flow. 58% of the valuations are done by a discounted valuation cash flow method, and the others are done by company comparable, company transaction, and market price and NAV. Now, NAV is also very, very important. Is why? Because at a lot of places it is said that the transaction should be above the NAV. So you should know how to do NAV also, but that's not, it's actually a piece of cake. That's not a rocket science. Actually, nothing is rocket science. But discounted cash flow method is a beautiful art. I just love it. And why I love it, I'll tell you ahead. You will understand my love for valuation going ahead. Yeah. So we are just talking about discounted cash flow valuation today. We have less time ideally because this session is for 1 hour. I generally take this whole session for 2 hours, wherein I take 1 hour for the purpose of making understand how valuation as a practice can be developed, where you knock the door. You know, I'll tell you another thing. I go to a lot of big companies while my friends are CFO or CEO or they've started a company or they've joined a company or something like that. And when I knock the door, they say, I say audit, they say, it's an international mandate or something, and we're getting audit done from someone we know or someone who's mandated by the investor. I ask them second if there is a GST or income tax, something which my CFM can actually help you out with. They would ideally choose, or they would ideally say that we already have a consultant for it. Whenever you're knocking a new door, you will find that the things which are regular, they will have consultant for them on regular or retainership basis. But because valuation is a kind of a thing which happens once in a year, once in a 2 year, or twice in a year kind of a thing, they don't have a kind of a retainer with anyone, and they can switch retainers with people very easily. So valuation is one such line, transaction advisory is one such line, which allows you to have a foot in the door. Yeah. So when you have a foot in the door, valuation helps you to bring you closer to the owners directly, because the people on the accountants or VP or accounts head, they won't talk about valuation of the company. They're not allowed to talk about valuations of the company. Who's gonna talk to you about valuation of the company is the owner of the company, or the CXO level person will be having a chat with you and all of those things. So therefore, you enter the right board, you enter the right house, you enter the right office. And once you're in, you can do wonders out of it. So that is there. So what documents do you need? Now, I told you that first and foremost, I'll talk about the historical financials. So I need the audited financials last. I need provisional financials as on the date of valuation. So let's say someone is asking you to get a valuation done on 30th September 2024. Now, you may not have audited financials available if the company is not listed, or it does not need, or let's say it does not need a limited review, so they may not have provisional financial on 30th, audited financial or limited reviewed financials on 30th September. So you may do it with provisional financials. Then you need projected financial, projected profit and loss account of the company for a period of 5 years, anticipated working capital requirement and capital expenditure over the forecast period, and then fully diluted shareholding pattern as on the valuation date. Now, this fully diluted shareholding pattern is a very, very important thing to note. There are very, very small things in this, but you have to keep note of these things, keep noting these things. These are very, very important. Yeah. So we'll talk about these things in detail. Then you need to understand what the business is, how they are performing, what is their current performance, how are they planning to grow, how the industry is growing, what is the future plan, what are the prospects, and all of those things going forward. Now, talking about the elephant in the house, discounted cash flow method. Yeah, discounted cash flow method has four pillars. First pillar is the projections. Yeah, everything, everything depends upon projections, but projections is not owned by the valuer. You would say ideally, projections are not owned by the valuer, but a valuer is subject to, is required to ideally have a reasonable understanding of the projections. And in case you do not ask questions on the projections, that can be one line of contention for your valuation. The second and the most important is the discount rate, which is weighted average cost of capital. Because we have half an hour, we will be discussing only the presentation. I will not be showing an Excel working of discount rate or WACC or terminal value or after adjustment. We'll just take you through the PPT, definitely. Yeah. And then comes the terminal value after adjustments and all of those. So let's first talk about the most important pillar, which is projection. Yeah. Now, whenever anyone sends you projections of their company, the first thing which you need to do on those projections is common size, which means that you need to see what percentage of revenue are all the items in the thing. So, for example, let's say in 1 year, they have marketing expense to 37%, or let's say 40% for ease of understanding. And the next year, they're bringing it down to 20%, and next year, 10%, then 0%. You have to ask question, if you were doing marketing of 40% of your revenue, why and how have you thought of actually decreasing this as the number altogether? How can you say that from next year onwards your marketing spend will go to half of percentage of what revenue you were doing, whereas your revenue is growing by, let's say, 30%, but the marketing expense to your revenue is increasing is only 20%, which is not possible. In case it is, please let us know what the reason for it is. So you need to do common sensing. You need to understand how the projections are being created, how the things are done, and all of those things. Coming next is the year-on-year growth. So you need to see what the historical growth pattern was. So let's say the company is into the is into a growth phase right now. Last year, let's say they did revenue of 100 CR, and this year they're doing a revenue of, let's say, 250 CR. They did 2.5 times growth this year. That's wonderful if they've done that as a growth. But if they are saying that next year they will grow only by 10% or 15%, then you need to knock the door and ask them how. If you were growing at 200% last year, 250% you grew last year, how can you say that you want to grow only 15% this year? Or let's say they were growing at a stage, at a scale of 10%, 15%, or 20%, or 30% for that example. And just in the projection, they're saying you're going to grow 75%. So you need to again ask them a question. How are you planning to increase this? Is there a kind of an investment coming in and you have already factored that investment into your books? Or is it something else? How are you trying to do that? Now, next comes in the industry trend. So I'll give you a few examples of this. Yeah. There was one person who came to me. They are into steel manufacturing. Yeah. So they said, Gaurav, we are currently doing a valuation of 100. We're currently doing a revenue of 100 CR. And we're looking at a valuation of 250 CR because someone has already given us a kind of a basic term sheet wherein they have intentions of bringing our valuation to 250 CR. So I said, okay, if you are looking at a valuation of 250 CR, I would like to look at your projections. So he said, okay, let's talk about the projection. So they were doing a revenue of 100 CR this year. Now, next year, they are planning to say that they are going to grow by 130 CR. I said, okay. They said, we're going to go 200 CR the third year. I said, okay. They said, we're going to go 300 CR next year. So I said, okay, there's no problem. But I asked them, what is your capacity utilization at this moment of time? So he said, our capacity utilization at this moment of time would ideally be 50%. Okay, you're currently doing how much? He said 100 CR. So मैंने कहा, so your maximum capacity at this moment of time is 200 CR. Absolutely correct. He said yes. So you're growing from 100 to 130 is okay. You're growing from 130 to 200 is still okay, though nobody can have 100% capacity utilization. Nobody can have 100% capacity utilization. But okay, if you're saying you're doing 200 CR, it's okay. But when you talk about the fourth year going to 300 CR, I have a question to ask. He said, Gaurav, I'm all ears. I'm all ears. Please ask me. So I said, are you adding trading in the same when you're doing manufacturing at this moment? He said, no. Management, our investors have totally told us, have clearly told us that there cannot be any trading because in the case of steel, the price fluctuates a lot and the quality of the material goes down. So we can't really do trading. I said, okay, no problem. I asked him the second question. Are you actually looking to get the job work done from outside and maybe sell it afterwards? He said, no, Gaurav, investors have said no to it as well. We're not going to get this done. So I said, wonderful. Then it may be the case that you've increased the capacity altogether. From 200 CR, you've increased the capacity to ideally 300 CR in that case, which means 50% capacity increase in your books. So then there must be capex, the capital expenditure which you're doing. So I went down and I saw that they had set up the whole project at 100 CR, and they are saying just by adding 2 CR per year, they'll be able to increase their revenue to 300 CR, which was abnormal. It is not possible. And I had a word with them in detail. We understood everything. And then they agreed that there was wrong in their projections. They had not considered capital expenditure while increasing the revenue. Therefore, their margins was going very high. Now, while we do this valuation, depreciation is actually the cash unit. Yeah, it's a non-cash expense. We generally do not have any impact on our valuation unless there is a tax impact of the depreciation in the same. So because there was a tax impact of the depreciation, we were able to ask them that in case there is tax impact, what are you going to do next? So he said, Gaurav, I understand that depreciation has a tax impact, but I will get back to you, understand the capex and get it done. There was another person who came to me and he told me that we are going to develop jets, private jets. I said, wonderful. I said, how many have you sold last year? So he said, we sold 15 private jets of 6-seater each. Okay. So he said, Gaurav, we're going to do 40 private jets next year. We're going to do 120 private jets next year. And we're going to do around 200 private jets the fourth year. I said, okay. So I looked at, again, same questions. I asked them, are you going to manufacture more? Are you going to invest more and capex and all of those things? That was there. They were doing capital expenditure. They were doing wonderfully great. They were increasing their capacity and all of those things. They were getting new funding done and all of those things in their projections, which was all in line. So I looked at the industry altogether and I understood how many private jets are being sold at this point of time. Wherein I understood that last year, only 100 private jets were sold. Last year, only 100 private jets were sold, and the private jet industry is increasing by 5% CAGR per year. Which means that when they say that they are going to sell 40 new jets next year, they are claiming a 40% market share of the new jets sold in the market. I said, that's huge. You're currently having 15% market share. We're talking about getting a 40% market share. That's huge. Now that was acceptable. Okay. In the next year, they were saying we're going to sell 120. They were actually exceeding the market estimate of sale of the total jets in the market of 6-seater. And they were saying from 40, they'll go to 120. So immediately came back and told them, sir, you're doing everything perfect. Who are you going to sell it to? In the world, there are 100 jets which are sold every year. How can you plan to actually sell 120 jets? You are saying you'll have 100% capacity, 100% market share from the third year onwards, wherein currently you have just 15% market share. Is it possible? He said, no, Gaurav, I think there is some mistake which my analyst has done. I'm gonna change it and I'll come back to you with the same. These are few things which you need to see. So you need to see whether the company's own factors are allowing them to have this kind of a projection, number one. And number two, you need to see whether the industry specific things are allowing them to get this valuation, this projection done or not. Then there are a lot of initiating coverage reports and analyst reports which are available in the market. You can ideally look at other listed companies initiating coverage report and look at what is the expected return or increase or projection which people are saying there will be in this industry, and then you can try to apply that. I always say that your projection should be budget or target. It should not be aspirational. You should not be talking about you're doing 100 CR this year and gonna do 1000 CR, you're gonna do 5000 CR next year, and then you're gonna do 10,000 CR, and then you're gonna go 20,000 CR. These are aspirations. You may go, you may have a budget, you may have a target of doing this. Wonderful. You may say even 500 to 1000 is not an aspiration. Gaurav, it's a doable thing. Wonderful. 1000 to 10,000 is also not an aspiration. Gaurav, it's a budget thing. Do it. You're saying 10,000 to 1 lakh is also not an aspiration. Gaurav, it's a budget thing. Prove it. I'm not saying anything. Keep doing it, what you're doing. But prove it to me that your projections are right. I always ask these questions. Yeah. Check whether same projections are given to investor or not. Now, this is very, very important. A lot of times, what will happen is they would have communicated some projections to their investors over the email. And for the purpose of regulatory, they will come back to you and they will give you another set of projections altogether. Now, when you ask them that, have you sent same set of projections to your investor? They will say, no, we're getting this for regulatory purpose. Why do we want to show these kind of projections to our investors? Investors, we need to show them the hyper picture and all of those things. So I would say, tell me what is the difference between the projections given to the investor and projections given to us? Is it a kind of a scenario analysis wherein you're doing a conservative valuation at this moment of time, but you've given them a very lucrative projection altogether? And what is the difference between the same? And in case there is no difference and you do not have the basis for it, I'm sorry, the projections given to the investors should be the projections given to the regulators. It should be the same. It should not be different. So you need to look at all of these things. You need to look at common sizing, year-on-year growth trends, industry trends, initiating coverage report and analyst reports, budget or target but not aspirational. Check whether same projections are given to investors or not, and all of those things. Yeah. So this is very, very important. Now coming to next is there are two types of free cash flow which you get. One is free cash flow to firm, another is free cash flow to equity. Now this is to my auditor friends who are doing the audit right now. I'll tell you there has been a recent case on one of the CA firm. I'll not name them. While doing the audit, they did not raise any question on the valuation report being submitted to them via their client. And they said that they relied on the expert and they did not ask any question on the valuation. You are supposed to ask questions on the valuation. If you're not asking question on the valuation, that's the first question of Nafra. They're going to knock your door and ask you why you did not look at the valuation. So you need to ask questions on valuation. Now, I have seen things going in the market wherein people have done FCFE and have chosen a discount rate of WACC. Weighted average cost of capital is used in case of free cash flow to firm, and cost of equity is used in the case of free cash flow to equity. You need to understand these things in detail, that the difference between the free cash flow to firm and free cash flow to equity is the debt movement, the interest movement. The movement in the repayment of the debt is considered in the FCFE, but it's not considered in FCFF. And the FCFF is discounted by a WACC, and the FCFE is discounted by a cost of equity. So these are two things which are there. Now coming next, the second pillar, we are just left with 15 minutes. Yeah. Ideally 8 minutes because Akshat told me that we're gonna have questions in the last. Yeah. So I'll ask you a few questions to understand, discount rates. So a lot of people come to me and they say, Gaurav, I need to get a valuation done of my unlisted company, which is currently doing a turnover of 50 CR and we are currently doing losses, let's say 2 CR or something like that. Yeah. So I tell them that, okay, in case you are doing this, sorry, give me a second. Yeah. So I asked them, let's say you want to get the valuation done. What should be the discount? Yeah. So I told them the discount rate should ideally be. So let's say you are investing into a blue chip mutual fund. If you're investing into a blue chip mutual fund, the 5 year return which you look at from this is ideally 12 to 13%. That's bare minimum that you expect from 5 years mutual fund, that is blue chip mutual fund. I'm not asking what it is giving you, but I'm asking your expectation. Your expectation is 10 to 12% bare minimum. Yeah. So let's say 12% is one on the blue chip fund. We'll talk about a mid cap. You're gonna go more on risk. You're gonna go more on returns. So in that case, you would ideally say that you would be looking at a 15% return for a mid cap. Let's say a small cap. A small cap will be ideally be at, let's say, 17 to 18% return. Yeah. So if your company, which is having a 50 CR of turnover and currently doing losses, I compare it to a mid cap or a small cap, mutual fund, you should ideally be giving me 2% extra return. So they are giving 18% return, you should be giving me 20%. Now, I am investing in your company as a minority. I am investing as 1% of your company. So I will not have all the rights. If let's say मैं आपकी कंपनी में इन्वेस्ट करता हूँ and I'm coming to your door every day and I ask you a lot of questions, are you going to answer me? You're going to say, no, Gaurav, you just own 1% of my company. I'm not going to reply back to you on all of these things. What I'm going to tell you is go to the MCA, pay rupees 50 and get my financials out of it. So I would say, if I don't have a say in your company and I'm expecting 20% out of the company, I would expect 1% more because I do not have a say in your company, which is a minority discount. I need 1% extra. He said, okay, Gaurav, let's say you are going to expect 21% from my company. Then I would say, tell me one thing, discount for lack of marketability. I bought your share 1%. Let's say you gave me 1,000 shares for the purpose of getting 1% of your company. But who's going to buy it? Am I able to sell your shares? Are they marketable in the market? Can I just go out in the market and sell it tomorrow like Reliance Industries? He said, no, you can't really sell it. So I would ideally ask them that you need to understand that there is a discount for lack of marketability in this. I can't really sell your shares. So when I was at 21%, I'll add 2% more to it for the purpose of discount for lack of marketability. Now, next comes a discount for size, margin, and business dynamics. When I'm comparing your company to those small cap companies with 18%, those small cap companies are also very bigger than you. So you need to ideally give me a discount for size, margin, and business dynamics into these companies specifically. So there will be a 2% extra premium to it. So I said, Gaurav, we're only talking about 25%. Okay, I'm gonna give you, let's say, expected return of 25%. Yeah. So I said, okay, if I'm getting a 25% return, I'll be okay with it and I can ideally do this. But he said, can you increase your investment? Can you increase your investment from 1% to, let's say, 10%? I said, you're accepting everything, you're a good guy, I understand your thing, and all of those things are good. I am going to invest into your company for, let's say, 1%, I'm going to increase it to 25%. So then comes a control premium, which was minority discount for size, margin, business dynamic, discount for lack of marketability, and comes control premium. So I would say, he will say minority discount will go out, but a control premium will come, wherein you will have less risk because you have a control over my company. Therefore, you will expect less return. So if I was at 25% with all of these three, now the minority discount going out, control premium coming in, 1% of minority discount goes down on 24%. 1% of control premium goes down on 23%. So if I have a control premium, I'm going to expect 23% from this company. If I don't have a control premium, I'm going to go 25% for this. So that's about WACC. But how do we calculate WACC? It's about how do you value is by CAPM method. It's not a capital asset pricing model. So what you do is you look at a risk-free rate, which is the 10-year government bond yield. You add market premium based on the overall return of the stock market, which means if if the Sensex has been operating for last 20 years and it has given around 17% return or 15% CAGR over a period of time, which means RM is ideally 15% in that case. So there 15% minus 7.53%, I go for 6.5%. And then there is beta. Now beta is a relative thing, which means if the Sensex goes up 1%, even Reliance Industry goes up 1%. If Reliance Industry goes 1% down, Sensex also goes 1% down. This is known as a perfect beta, which is 1. So a lot of times I've seen people saying, because there is no comparable company, we chose to take 1 ka beta. You can't really take 1 ka beta if there is no comparable company. If there is no comparable company, there is a comparable industry which you can look at. So let's say Ola was listing recently for their EV product, and they say there is no other EV company, a sole EV company, other than Tesla, who is listed in the market. And I can't really compare myself to Tesla at this own time because I'm very small. So therefore, I would want not to, get a beta, and I would say beta of 1. You are selling ultimately two-wheelers. Yeah. In the country, if they are going to sell 1 lakh two-wheelers, EV, let's say, is 20,000, but the number of two-wheelers will always remain 1 lakh. You're not going to create a new category out of it. The category is a subcategory of two-wheelers. So therefore, your category, which is the EV sector two-wheeler, is part of this category only. So you need to see that they adopted beta of comparable companies after considering adjustment for company specific factors such as projection risk, illiquidity, size, business dynamics, stage of the business in the business life cycle. With that, there is a beta which you need to work upon. Yeah. A lot of times I have seen in the valuation report wherein people have said beta as per Damodaran. Now, there is a authority, I would say, in the valuation, who is Mr. Aswath Damodaran, Dr. Aswath Damodaran, who teaches at New York University in Stern Business School, and he takes out an analysis on half yearly basis, wherein he tells industry-wide beta. But alongside that analysis, he also takes out a video on YouTube and he says that these numbers should be used for the purpose of benchmarking only and should not be quoted for the purpose of regulatory valuations. I have seen n number of valuers saying beta as per Damodaran and giving the valuation report altogether. Now, Damodaran is not your partner. Please understand. You can say beta as per Gaurav Sukija. If Gaurav Sukija is your partner, you can't really say beta as per Damodaran when Damodaran is not your partner. Or Damodaran was not part of this analysis. So Damodaran says you can benchmark your valuations to my beta, but you can't really quote me in your valuation reports. So you can't, let's say the beta was wrong while doing this. So do you think the regulators are going to knock Damodaran's gate and say, Damodaran, you gave a beta and that beta did not match, so I'm really sorry, you want to go to jail? That's not going to happen. So you can't really say that. He is not a regulator. He is a person who is just doing a basic analysis. So you can't really say that. Yeah. Therefore, you need to look at various things. Now, how do we calculate RM? Is let's say 1st February 1999 was 1,000. 31 December it is 23,811. So in 15, the years, that is 22 years from there, return on BSC has been 15%. So you would ideally say and dividend yield was 1%. So total return expected market return is 15.9% altogether. And then there is terminal growth rate percentage and cost of equity and all of those things which you need to see. Now, this is an example wherein people have said source beta Aswath Damodaran. Now, this is wrong. You can't really say this. That the beta is as per Aswath Damodaran. Risk-free rate is investing, that's okay. And then market return BSC 500, that's also okay. So you can say that, but rest you can't. So this was one of the extract from one of the valuation report from a good valuer I took out while I was doing a review of them. So no name given, nothing given, basis that, yeah. The third pillar is the terminal value. I will just touch upon this, which is Gordon growth method, H model, and exit multiple. The most used method in this is Gordon growth method, and the second most used method is exit multiple, and the third is the H model. So you can choose to do any of these. You need to do a detailed research on this. We just left with 5 minutes, so I can't really talk about this in detail. Gordon growth method is the most used method. You can only use Gordon growth when in the last year there is a maintainable EBITDA and maintainable revenue. If there is no maintainable EBITDA or maintainable revenue, you need to do exit multiple on whichever is maintainable, revenue or EBITDA. Whichever is maintainable, you need to look at that. In case both the things are not applicable, then you need to look at H model, wherein you talk about that neither the revenue nor the EBITDA is maintainable at this moment of time. It will take 10 more years to ideally come back to this scenario. Therefore, I am applying an H model, which is a two-stage dividend discount model, similar to that, and we apply that to do the valuation for terminal year. Now, terminal year is very, very important. Please understand. You are giving from the projections which the company is giving, the valuation will be maximum 50%. And more than 50% of the valuation will come from terminal value which you are giving. So it is very, very important to understand the importance of the terminal value valuation. So you need to understand these methods in detail to do the valuation report. I told you by this 1 hour session, you will not be able to learn how to do valuation, but you will learn how to talk about valuation more often. Yeah. Then there are a few after adjustment, fully diluted shareholding pattern, cash, investments, land, surplus, debt-like items, and all of those things. There are a few other methods which are not regulatory methods and not used, but they can be used for the purpose of basic understanding on the venture capital method, the Berkus method, the risk factor summation method, scorecard valuation method, and all of those. I'm not going to go to the firm details. And I'm going to give this session to Akshat and Yash for the further moderation and handing over the session to CA Dinesh Dwivedi ji. This was it for today. A very, very warm Diwali greetings from my end. Thanks a lot to ICI for giving me this platform to speak. Akshat or Dinesh, as you must think, you can take this forward from here.
Thank you so
Thank you
much.
so much, Gauravji. Wonderfully delivered this lecture on valuations, and definitely, as you said, though we may not understand how to do valuations, but definitely now every one of us will be, competent to speak about the valuations, the various methods involved, and what are the questions to be asked. Definitely in this, uh, we have one question. I'll let you know. We have this question from Delhi. So good afternoon. Do we need to register with some authority to conduct valuations?
Yeah. So, valuation under Companies Act needs to get a registration under Insolvency Bankruptcy Board of India, which is a registered valuer. But under Income Tax Act, chartered accountants alone can give valuation report. Under Income Tax Act, you're allowed to give valuation. Under FEMA also, you're allowed to give valuation as a chartered accountant. So, yes, you do need a separate registration, but that's for Companies Act. For Income Tax Act, there are a lot of places wherein merchant bankers are currently said that the valuation should come from merchant banker. In few places, it is written chartered accountant or cost accountant or merchant banker. So it is better being a chartered accountant. And in case you're looking to pursue valuation as a career altogether, which I do, you should actually do a registered valuer course under Insolvency Bankruptcy Board.
Fine, thank you. I'll just check if there's any another question. Okay. Gaurav, I have one personal question, like one question wherein I come across this valuation thing. So there was a transfer of share between the shareholders of the private limited company. Now, so do we need to do both the valuation as per Companies Act and as well as for Income Tax Act?
So I'll tell you. When you're doing a transfer of shares, the company is not involved. The company is not involved is because there is change of hands within the shareholders.
Right.
So the company does not have to do any filing. There is one form which is SH4, which the company has to file. Ideally, need to keep it with themselves. And in the annual return, they just need to tell that this transfer of share has happened over a period of time. So the name of the shareholders have changed. So that's not needed. Number one. Number two, under Income Tax Act, there is a section which is section 56, subsection 2, clause 10 of the Income Tax Act, which says any property other than immovable property, if transferred, need to the consideration for that should be more than the fair market value. And the fair market value is defined under Rule 11 UA, Sub Rule 1, Sub Clause 2 or 3, wherein it talks about that the valuation should be done via 11 UA method, wherein 11 UA rule, they have given a certain set which is A plus B plus C plus D minus E divided by L. So that's a kind of a into PE by PV. They have a method there. You need to follow that as a method for doing the valuation. It's basically NAV and adjusted NAV from the perspective of income tax, which is there. So you need to take care of that. So valuation
Fine.
is needed under Income Tax Act. But again, this valuation can be signed by a chartered accountant or a cost accountant or a merchant banker or the company themselves also. Under transfer of share, there is no compulsion for a chartered accountant or anyone to give a valuation report. The most easiest way of doing a valuation is via transfer, is in the case of transfer of shares. Even in case of right issue of shares, when you're giving shares to your current shareholders, the Companies Act does not mandate a valuation report. So a registered value or valuation report is not needed. Until now, because there was a section which was 56 to 7B of the Income Tax Act, which is removed via the budget last year. Therefore, no valuation is needed under the Income Tax Act also. But again comes section 56 to 10, which mandates a valuation to be done under Rule 11 UA. So even right issue of shares is the same as transfer of shares.
Thank you so much, Gauravji. Now, to our participants for the today's webinar, we'll move for our next session. The next session, which is on how to handle the ED cases in presently changed scenario. For this, we have with us our eminent speaker, CA Dinesh Kumar, CA Dinesh Dwivedi sir, is from Surat. So, welcome to this session. His brief introduction: he is in continuous practice of more than 26 years in Surat and has served in finance and account department in KRI BSTO company, Haridra Surat, and has also worked with NSIC Mumbai. Remained advisor to FOS TTA Surat for 8 years and a secretary of Golden Plaza Market Surat for last about 15 years. Presently, he is the chairman of Surat Tennis Club and treasurer of Pickball Associations of Surat. So, sir is also very fond of sports. Wow. So, we welcome you to this webinar and I request you to start with your deliberation.
Thank you, yes. And congratulations to Gauravji for his wonderful deliberation. And I also got some insight about the valuation and the role and the opportunity for the CAs in the valuation field. Certainly, I would like to welcome all of our viewers and say very happy Diwali to all of you. And as Gauravji said that today is the some day which is not so suitable, somewhat awkward on the verge of such a big festival of Diwali, but still so must go on.
Yes.
Then now to start my topic, how to deal with the ED cases in the presently changed scenario. Rather, I would like to say how to deal the ED case in presently changing scenario. We might have observed for last few years there is a atmosphere of changing rules, regulations, decisions from the government side, sometimes from the court side also, sometimes agency side also. If we come to our topic, practically I want to share my views about the practical aspect of the ED cases. And it is coupled with the cases of CBI also, because in earlier days, we had observed and we were coming across various examples where there was a default in the bank loans by the borrowers. There was some deadline or some parameters up to what or above that limit. If there is a default, there is a potential chance of the CBI inquiry in that case. But nowadays, the things have changed so quickly that now that parameter is not available. I think I have seen in very small cases also CBI is coming, inquiring in detail. and later the case is referred to the ED. It was not earlier because we were of the opinion and every was knowing also that when ED comes means there is a big involvement of the fund like 100 crores or so. But nowadays, I have seen even 5 to 10 crores default is there, then ED comes into play. Reason, the CBI inquires criminal aspect and it doesn't have power to reverse case. ED has got power to attach the property to recover the fund. That's why what I perceive that the thinking of the government or the agencies or the administrator, including RBI, they might be thinking that if the ED is involved, certainly there are potential chance of getting some money back, which we have seen in case of the Vijay Mallya, Nirav Modi cases. 1,000 crore of the properties have been attached, confiscated by the ED in recent past. Same way, now we are coming across that ED is coming. So first of all, I would like to share my some live cases where I have personally come across the CBI cases and ED cases. So first I should start with the CBI cases because first the CBI is coming for inquiry because when the FIR is filed by the bank or any agency, that is mainly with CBI. CBI comes and inquires about the criminal aspect and files the charge sheet in the designated court, generally called CBI court, available in so many, in every state you can say. So I'm giving example of my personal case. It was 21st December 2003. I received one call from the CBI office. I'm speaking Mr. So and so, ESP from the CBI. I want your presence in case of so and so. I was surprised that first time in my life I am getting the call from any investigating agency, that is CBI. There might have been some other agencies like vigilance of the bank or local police or something like that. But when there is a call from the directly CBI, certainly the person coming across first time such experience, he gets somewhat disturbed. I also personally went here and there and took the means legal advice from the advocates. Everybody said, and he just frightened me. Oh no, you first consult some good advocate, and then you go to the CBI. It was around 21 years back. But I was of opinion that if I have done something wrong, I must face that. And no any advocate can know better than me about me. That's why I ignored all these advices and directly when they called me in Mumbai, I went directly and appeared before them. What actually the approach of CBI and investigating agency, including if you have come across the income tax investigation department, they are actually treating you first psychologically. Psychologically means they will keep you waiting there for hours. And I was also kept there waiting for hours. Thereafter, I was called and put forward some questions. Questions were like, you were aware of the fact that these properties are mortgaged in some other bank, but when you got this party switch over to other bank, why did not you mention in your proposal or your project report that fact that these properties are mortgaged there? Then I told there may be two chances. Either there may not be any provision in the application form of the bank about this question, or there may be some provision in the application form of the bank, but party might not have disclosed this fact before me. Then that officer confronted me with that application form of the bank, which I had prepared, and it was integral part of my project report. Then I told, after going through that application form, that sir, there is no any such provision what you are asking from me. Then he again looked over here and there. Then he asked me another question: how you have come to the projection side, like turnover, how you made such a huge turnover while the actual turnover was not so commensurate with your projections. Then I told him, and I was very much confident about my working. And my message to the young chartered accountant or any chartered accountant involved in such project financing work is that he must be very professional and very systematic in his approach of working. Then I told that officer that I am keeping the borrower before my table and I'm asking each and every questions, very small to very big questions, like what will be your sale, how you will means achieve that, and what will be your suppose per unit cost of labor, per unit cost of your electricity or some direct expenses. Very minutely I go through all these details and then I prepare. Then I told him that I had made to sit that particular party before me and I had prepared, and there is a detailed calculation that may must be enclosed with that project report. Then he gave me that proposal. You search me and show me where it is. Then I means gone some pages here and there, such, but there was no such calculation. I was little bit shocked. Then I saw that there is some missing papers from that project report, because I was preparing and still preparing my project report that is properly indexed. And from the index itself, you can come out and about the what details are available at which page of my project. Then I told that officer, sir, you see, there are so much paper missing from this project report. Then he was also started seeing surprisingly, let me so he saw, yes, there were some missing papers, around 15 to 20 pages were missing from that project report. What he said, have you this copy where there are these paper available? 100% I must have some shadow copy I keep with my office. It was 29th December. Then he said, you come day after tomorrow with those, both of your, there were two actually cases. So he called me both the project report of two cases. Then I told, no, sir, I will come tomorrow, because day after tomorrow is a 31st December. I have my own program. The better I will come tomorrow. You was okay with that. Okay, you come. Then I came to my office and saw that those details were very well available with proper indexation and proper numbering of the pages. Then I went, and when I saw those details to that officer, he was surprised. Immediately, he was also actually surprised, and for the some time he went out. After 10-15 minutes, he comes and asks me, okay, Mr. Dwivedi, now I want to record your statement. Then I requested him, sir, I know some finance and account aspect of this, your legal, means project report, but I'm not aware of the legal aspect of this, what you are inquiring and maybe forming opinion about me. So he actually taunted upon me, you stop, and because of you this case has actually gone away from the hand of CBI, but don't disclose this fact to anybody else. He suddenly picked up the phone and rang to the journal office of the bank and told them, I'm examining the chartered accountant here who has prepared the project report. It is your manager who has actually removed the papers. And you all should believe that manager was charge sheeted. Okay. So what I want to convey the message, we should be very professional and very systematic in discharging our duties. Now that case has already decided, and I was made their witness of that case and went for the witness also. Now coming to the part of the ED, at that time it was a somewhat a bigger amount issue, means matter, but still there was no any play of the ED at that time. But now, in very small cases, I have seen around 5 crores loan amount ED is coming. Why? I told you already that the government or the agency want to recover the money, and the action of the ED is so fast that you cannot imagine how fast they are moving. Now, what is ED? We should understand first that the origin of the directorate goes back to the year 1956, when an enforcement unit was formed in the Department of Economic Affairs for the handling of exchange control laws violation under the Foreign Exchange Regulation Act. It was called FERA, and we were actually subjected to go through the FERA as our subject in final fee exam. It was headquartered in Delhi, headed by the legal service officer as the director of enforcement foreign. Thereafter, in 1999, the act was renamed, or you can say the new act came as a foreign exchange management. It was a civil law, rather, with officer empowered to conduct investigation into the suspect contravention of the foreign exchange laws and regulation, adjudicate or all the contravention. They were imposing penalties on those edges and who had contravened the law. Now, the ED presently today is the implementing agency of the Prevention of Money Laundering Act 2002. It is called PMLA. It is a criminal law with the officers empowered to conduct the investigation to trace the assets derived out of the proceed of the crime. This is very important phrase. Proceed of the crime. It can provisionally attach the property, confiscate the properties, and arrest and prosecute the offender found to be involved in money laundering matters. Now I can share with you a live case of the ED also. When you go to the ED, you will be subjected very high security and very high checking. You may be subjected to put out your pen, your watch, your belt, even small things they are making you to keep outside, and they are sometimes they are providing you a locker to keep your belongings there also, and then you can go inside. Now, why the CA should be means aware of all these ED matters? Because Money Laundering Act deals with mainly with the money. You can say with the finance, and the finance records are generally found in the accounting, maybe accounts of the bank, maybe accounts of the company, maybe accounts of the borrower. Only chartered accountant has knowledge of the finance who can deal with the such cases of his client. So when there is a inquiry from the ED, they generally they issue the summon to the accused, or you can say the party, they can issue the summon to the witness also. They are issuing summon and calling the information along with that summon. That is a big list of the records generally related to the property, income tax returns, and the balance sheet and profit and loss account of the borrowers. This can be handled mainly by the chartered accountant. That's why the chartered accountant most preferred consultant. I'm telling you, chartered accountants are more preferred consultant to the ED department also, because they expect the person. Generally, one thing I want also to tell you, that the mostly there are IRS who are on deputation. They may be from the income tax department, they can be from the custom also, they may be from the GST department also. Some police department is also, means personals are also there on deputation, but mostly you will find they are IRS. So they are very much comfortable with the dealing, means discussing or understanding the matter with the chartered accountant, because the chartered accountant can make them understand each and everything very clearly, very precisely. The same happened with me also, but I am also doing something on my own. Suppose if they are issuing someone and asking details, I get the authority letter from the accused or the witness to whom the summon has been issued, and get all those details prepared, which has been asked along with the summon. When I prepare all these details comprehensively, I first personally go to the ED department. Why? Sometimes they actually annoyed with me, why you have come alone, where there is that person. Then I told them very gently and very respectfully that you have called so many information, sir. They are relating to the accounts, finance, and income tax. I have come with those detail. You go first in those details. If you require any further detail, that will also I will bring. And the day when you say that the attendance of that accused or person, someone is compulsory, I will make him to attend before you and give the statement. So this logic, they also get, yes, there is some substance in the logic, because first of all, they also want to have some opinion and some understanding about the subject and what is the matter, because they are also not actually the dreamer and they can visualize the things. After going through the details and the documents, they form an opinion of what direction and what depth they have to go further. Then they goes on asking, after one detail they are asking some other detail. So there is a chain of the details, and it takes around 2 to 3 months for the inquiry when they come out with the decision. Then they finally ask the person, you come and give the statement. So this is the actually procedure mainly done at the first stage. This is, you can say, the inquiry stage. But at the same time, if they are of the opinion that there is a need of attaching some property, then they can go for that also. Suddenly they can jump over from the inquiry. They can directly, if they get something from the document and paper submitted by the chartered accountant, then they can switch over and directly can attach the property. These are the very vast power given to the ED only. These are not given to the other agency you might have seen, but the ED can go directly and attach, even without, it can attach the property of the person who has not been even summoned also. He cannot know why my property has been attached. So first of all, even if you come have across the cases when there is a FIR, first information report registered by the police department, only thereafter the police takes action against the accused. But in case of the ED can, without registering that report, their report is called ECIR, ED case information report. So without registering that ECR, they can go directly for taking action. And very ironically, I'm telling you, you are not entitled the copy of ECIR, means the report registered by the ED. Why? Because they say you will be given that copy of the ECIR in the court of trial, where the court that case will be under trial. That is generally designated court or the session court, equal to the session court. But there is a check. The ED, when taking action, suppose attachment of the property, they are duty bound to record the reasons in writing. Means the officer not below rank of the deputy director, he will have to record the reasons in writing why they are needing to attach this property in so hurry. So I will deal that subject in detail. Before that, we should understand the somewhat background of the ED or PML Act, why it needed. The actually originally it was noticed by the many countries of the world during, you can say, 80s and 19, that there is a need of such law when the offenses, when means relating to the misuse or generating money from the criminal proceeding, a proceed of crime. So it was actually needed by the so many countries of the world, and in our country also. It was discussed for the years in the parliament. Thereafter, in 2002, the parliament brought the Prevention of Money Laundering Act 2002, which was actually implemented in the year 2005. Now, you see the after expiry of about 20 years from the implementation, the situation is entirely changed. Situation is now that it has become very draconic law. The provisions are very strict. Provisions means admitted position is that it is the special act that, and two things are very important which have been noticed by the media persons, many advocates and judges also, that it came in 2002, the 21 year about ago, but only less than 10 cases have been decided finally after the trial of the judgment are given against the accused parties. Just see that in last 20 years, about 20 years, only 10 cases are finally decided. That how basically this long procedure is available at the site now. Conviction rate is also less than 8% in this case. And although in case of scheduled cases, first thing we should remember that the ED will proceed against the person who has committed scheduled crime. Scheduled crime, and he has earned some money from the such crime which is called a proceed of crime. Scheduled cases means scheduled offenses are those which are listed in the Schedule A of this Act, which is given in the Act, that can be accessed by the chartered accountant. We must also know that after every second day, there is a matter discussed that without filing an FIR, without even complaint, the person is raided by the ED. We involved in the money laundering. The custody is taken. His house is raided. Money is recovered from his premise. So as the jewelry, and so see the ED say the forget about the Evidence Act, which is not maintainable or which cannot be applied in money laundering case act being the special act. Actually, the ED is considering the PMLA as a special act and they don't compare it with the other criminal act also, where there are some proceedings and some procedure to be followed. But in this case, what they are saying, you forget all the Evidence Act also. It is on one side, the view is that agency is taking the correct except the other side is also that position is different because the person against whom FIR is pending, nothing was required from his premise, but being the associate of the person who has committed crime, he is also taken into the clutch of the ED. So these are the things which are still under high debate. Now, the very larger view is that it is discussed everywhere in the court itself that you will find every 2-3 months new judgment coming out. But in the month of July 21, the Constitution Bench of the SC had decided rendering the judgment on the Prevention of Money Laundering Act 2002. From the time to time, judgment has been given Supreme Court or the High Court in order to many series of the judgment. It is also some are still pending before the Supreme Court. The definition of proceed of crime is given in the section 21U, that is proceed of the crime. Now, the starting point of the ED comes from the proceed of crime. Proceed of crime means any property derived or obtained directly or indirectly by any person as the result of the criminal activities relating to the scheduled offense. It is the precondition is that the offense should be scheduled offense. The value of any such property or where such property is taken or held out even outside India, then the property equivalent to the value held within the country or abroad. So this proceed of crime is that if somebody is involved in directly or indirectly for the criminal activities, naturally that is the proceed of crime. Now, how the authority will take the action, because suppose some officer from the agency notice that there is a proceed of crime in the hand of the person or person A or person B, then how will he take the action against the person for the guiding or guiding purpose? Section 10 is the in the prescribed schedule there under the title attachment adjudicating and the confiscation under section 5 of the act. It is to be noted that the deputy director of the or an officer authorized by the director for the purpose of this section has reason to believe, and that has to be written in writing on the basis of the material possession, and that the number one person is in possession of the proceed of the crime, number two of such proceed crime are likely to be concealed, where the director or any other officer not below rank of the deputy director has reason to believe, to means that he must be sure that he has a reason to believe that some person or material in the possession of the accused party, and any person in possession of the proceed of the crime, or any other person who has proceed of the crime, and therefore he is said that such proceed of the crime are likely to be, he has to pass to some other person. Then he may take action against this person under section 5, and investigation can be carried out against him. There is a provision under section 5.1 that no such order of attachment shall be made unless in relation to the scheduled offense of the provisions of the code CRPC of the Criminal Procedure Act, or schedule of offense like 420 cheating, or in relation to the schedule offense. Schedule offense has been equated to the criminal offense, like I told you, criminal procedure schedules. Report has been forwarded to the magistrate under the section 173 of the Code of Civil Procedure, or the complaint has been filed by the person authorized to investigate the offense mentioned in the schedule of offense. Under the criminal procedure, on the basis of that, the officer is satisfied that the complaint is prima facie case is made out, and he has reason to believe now over the time it was noticed that some of the person were involved where there was no complaint, or even there was no any report under section 173 of the Code of Criminal Procedure. Still they are involved in the proceed of crime. They are involved in the money laundering. So amendment, there was amendment by the government. Then there are so many judgments from the High Court and the Supreme Court, but basically 173, by the time he will dispose the property or he will enjoy the tented money. Further, notwithstanding anything contained in the first proviso of the section 5, it is provided further that notwithstanding contained in the first proviso, any property of any person may be attached under this act if director or other person not below the rank of the deputy director authorized by him, or the purpose of this section has reason to believe that that reason has to be written into writing on the basis of the material in his possession. And if such property involved in money laundering is not attached immediately under this chapter, the non-attachment of the property can frustrate any proceeding under this act, meaning thereby, in simple language, it is the second proviso says that if the deputy director during the investigation has reason to believe in writing that, but in the both situation, the reason to believe had to be given in writing, and the reason to be given are mandatory, meaning thereby any property which is subjected for the attachment of the ED, that cannot be attached unless the reasons in writing have been recorded. And there are so many views and decision of the court that the reason must be real. They cannot be merely presumption. There may be some base, there may be some evidence. Mere presumption that I have reason to believe, that will not survive in the court. Now, this can be done even without registering any FIR against the person under whose, sorry. There are two views. One view is that many people say that how you can proceed with the property without even registering the FIR? How can you proceed with the property without any complaint? How can you proceed with the property under section 173 of the Code of Civil Procedure. It is not possible, and whatever second proviso is being used that will dispose of the property will frustrate the procedure or the proceeding without any evidence. How it is possible that the second proviso can be invoked by the agency? On the other hand, agency says that it is mandatory provision, it is a stand-alone act, and the presumption is that he may dispose of the property, because as per the presumption it is not mentioned that there, but they say no. Basically, the reasons to believe, they always mention we presume that he will dispose of the property. So this proviso basically is being used by the agency in most of the cases where the FIR is not there, charge sheet is not there, complaint is not there. So the debate can be, the people or some people, they are very upset. They say that nothing is pending against us. Then how it is possible that my property can be attached, whether or the bank account, whatever it may be? But there is a some remedy also. The authority, because ultimately it is a matter of trial, it is a matter of the complete authority, because if after the trial nothing is found, the property will be released, and evidence, if any, basically if there is nothing. But the other view is that the person may say that his goodwill has gone, his reputation has gone, and he cannot dispose of the property. It is his property, and he is not involved in that any kind of crime. Even then, why my property is being attached? These are the valid reasons forwarded by the parties, but it has been discussed in length in political agenda also, and so we are not concerned with the at this moment regarding. So on the basic things like FIR, ED is registering the ECIR. So ECIR was registered, and then basically the concern investigating agency was doing the investigation now under section 50 of the Act also. Under section 50, again, the agency has full authority to summon the witness, summon the accused party, and the summon the person against whom no FIR is there. That also can be called by the ED for the inquiry purpose. Now, as far as the statement is concerned, and there is a section 50 that is very stringent view. The Supreme Court has taken the view that the statement made before the agency under section 50 is admissible in the as evidence. Now you all see the whatever statement is taken by the ED from any person, that can be used as evidence in the court of law where the case is to be tried or being tried. Under section 50, this statement admissible as evidence, it is akin to the sections 164 of the Code of Civil Procedure. 164 is that the statement made before the magistrate, and the same can be used as the evidence against section 161, which is not admissible in the schedule offenses before the court of law. It has been the case of the 50 also. There are two views. One view is that statement under section 50 is taken without the cross examination. Means, if generally in case of the criminal case, the statement taken by the police, statement taken by the CBI, they are not admissible, but the burden of the proof that whatever has been stated in the statement, that the agencies has to prove, means the government agency or investigating agencies, they have to prove. But in case of the ED case in PMLA, the section 50 gives power to the ED that they may use the statement taken from any person as their base, as their evidence in the court of law. But this intention or the provisions of section have been, means, got criticism from the various corner, and there are two views. One view is that a statement under the section 50 is taken without cross examination, without the allowing the advocate to make the point. The only accused person are called and they are put under the pressure to make the admission or guilt. Although in many cases it has been noticed that this statement was made and during few weeks the statement was withdrawn by the party before the court or before the authority that it was made, saying that the statement has been taken under pressure. This debate is still there, but the Supreme Court said that the section 50 statement is a valid statement and can be applied before the special court, which can be read as evidence under like section 164 of the CRPC and is admissible under the law. So section 50 is very important, and if on the basis of the statement of all the parties, officer concerned is of the view that the party means that the property means movable or removable properties involved, immovable properties also involved in the money laundering, he can pass the order for the provisional attachment, and within 180 days you see the very, means it can be said that this is the help or assistance given by the PMLA to the aggrieved party, that provisional attachment remains only for the period of 180 days. He has to then basically has to go to the adjudicating authority. Now, whatever properties are being attached by the ED, they are mandatorily to go to the court of the adjudicating authority, generally having three-person bench, one chairman and two members. That authority, and that till the provisional attachment order is passed, the accused party is has to be informed by the adjudicating authority, and he will be called to present his case why this attachment should continue or why it should be revoked. During the paper that the adjudicating authority will share the paper in its hand, and that will be party, and the adjudicating authority, who is the confirming part of the confirming, you can say that it means adjudicating authority is a confirming agency. The provisional attachment is under section 8 of the act. Section 8 of the act says that at the time of the notices will be issued to the accused parties and the person involved in money laundering or associate or friend of the accused party who has the proceed of crime in his hand from the accused party. So all the parties who are served to those parties concerned, then chance will be given to all those parties to file their reply within the prescribed time. After filing the reply, the adjudicating authority will hear the matter like in a court. After hearing and considering the all document, all contentions, all the argument and evidences, the adjudicating authority will ultimately decide whether it is a case of continuation of attachment or the provisional attachment of the provisional attachment order, or should continue or should not continue. If the adjudicating authority will find that it is the case of attachment should be confirmed, the attachment will be confirmed. And I'm telling you, in past 3-4 years, if we go and take the data, we will find that in 99% cases, the adjudicating authority has confirmed the provisional attachment, and it has actually rejected the provisional attachment, and it has revoked that attachment only about in 1% cases. Now, one more catch here is that the ED agency, even after getting confirmation order from the adjudicating authority, they can wish that they want to confiscate or to liquidate that property. That is also there. They can put the condition to before the accused to put the proceed of the crime before the ED and give the undertaking that the attachment will continue till the trial is over. They can put the condition. Either they can take possession to take possession of the attached property, because this is basically, this is not a relapse. By this judgment is passed in July 21, where the condition was that to deposit the proceed of the crime before the ED and give the undertaking the attachment will continue till the trial is over before the special court, even without any condition from the appellate authority, can pass the order. If this condition is being put by the ED, the appellate authority can pass the order or part the amount or part the proceed according to the effect of the circumstances. If the person agreed by the order of the adjudicating authority is not satisfied, he has one remedy to go to the appellate tribunal of the PMLA. He can try to get relief from there. If he is not getting relief from there, also he can go to the High Court and Supreme Court as well. Now, coming to the some important section of the Act. Section 17 of the Act is also gives power of search and seizure to the ED department. Search and seizure is also same power as we had discussed in the making the provisional attachment of the properties. And now the section 19 of the Act is also there, giving very vast power to the ED, like power of arrest. If during the pendency of the case proceeding, it is noticed that the person having huge amount of the money and money must be involved, then basically under the section 19, officer can arrest the person concerned, and after arrest, he has to produce the arrested person before the magistrate or court of trial within 24 hours after giving the transit time. If he has been arrested out of some city or state, then that time is also given. Now, very important section I am going to deal with, and maybe last one, section 45 regarding the grant of the bail. this is the very biggest discussed and litigated section of the PMLA Act, where we might have seen that there is a very low chance of getting bail if the case has been registered by the ED against any person. Section 45 of the Act regarding the grant of the bail in the Prevention of the Money Laundering Act, there is a Supreme Court gave the judgment that the grant of bail under the schedule offense and some tool will apply to the cases maintaining the Prevention of the Money Laundering Act, but within 1 month. You see here, the very important thing, Supreme Court said that while giving the bail under the schedule offenses, the same tool will apply as it has been applied in other cases also, like CRPC cases. Then, but within 1 month of the decision of the Supreme Court, there was an amendment brought by the government that twin procedure must be followed. Number one, that bail application must be held under the Prevention of Money Laundering Act after hearing the government officer. Means there are twin conditions. One condition, that government officer must be heard. That amendment was made by the government. Secondly, the court at the time of granting the bail must give the reason. See here, the catch of this section, that this person is not involved in money laundering, then the bail can be granted. Now, you see, if the court says that yes, he is not involved in money laundering cases, then court can give the bail. But the problem is that now you see the problem, if there is a doubt that if there is any presumption that he may be involved ultimately after the trial, so bail should not be granted, because the point is under Section 24 of the Money Laundering Act that there is a burden of proof. In Criminal Procedure Code, the burden of proof is upon the prosecution, but under the Prevention of Money Laundering Act 2002, the burden is upon the accused party, because the agency says that we have already examined the matter at the time of investigation, and Section 50 statement was also regarded. Therefore, there is a presumption that the accused is involved in the crime. Now, if the burden of proof is upon the accused that he has to prove that he is not involved in any crime, then he can be considered to get bail. Burden will be put upon the person accused to establish he is not involved in the money laundering. So burden is totally different in case of the money laundering cases. And now there is some matter, there was some discussion on this matter regarding the condition of Section 45 of the Act. 45 section of the Prevention of Money Laundering Act, all the judges, there is a problem for the judges also in case of the granting bail to the accused. What is that? You see, the special court judges as well as the judges of the district court, many of the magistrate of special court or the judges were saying, if we have to read everything, because which is contained in the charge sheet of the 1,000 pages. Sometimes there is a 4,000 pages, 3,000 pages in a charge sheet, and if that is gone through, and they are mandated to go through all this material of the charge sheet, then, and if they come out with the opinion that yes, he is not involved, the accused is not involved in the crime, then why they should not quash the proceeding at that stage only? Now, these are the very intricacies in this section, getting the bail for the accused. Money Laundering Act, no doubt it is a heinous offense comparable to the terrorism and direct trafficking, and court find that the PMLA is a special statute equipped with the exception of the criminal procedure law in order to combat the most heinous crime. Now, as far as the Section 24 Money Laundering Act is concerned, that was the case discussed because Supreme Court has discussed about the reverse burden of the proof, where the basically it is said that under Section 24, it provides that the burden of proof of that pursuit of the crime or untainted property lies upon the accused, meaning thereby the offense of the money laundering act person is guilty or person is guilty until he is proven to be innocent. The court has found that the reverse burden of proof to be the justified and in line with the object of the act. Now, twin condition of the bail is also discussed in the recent judgment. What are those twin conditions? Let us go through those also. Section 45 are means mandating that there should be the reasonable ground of believing that the accused is not guilty. First thing, that accused is not guilty, then why the case is being registered and being tried upon or against him? That is the big issue. It is a contradiction within the act. Guilty. And secondly, that he is not likely to commit any offense while on bail. The condition are usual. And third is that the twin condition of PMLA were given, struck down by the two judges bench presided by the Justice Nariman, and called this case Nikesh Tarachand case also in 2017. It has held that they were creating discriminatory, manifesting arbitrary result based upon the nature and the of the predicate of offense. Instead of offense under the Money Laundering Act, now other finding is that the bench is also clarified that the authorities under the PMLA Act are not police, and because under Section 161 evidence is not admissible, the evidence before the court is given by the Supreme Court bench, that it was clarified the authorities under the PMLA Act are the not police officer, but they are proceeding under section are inquiry and not the investigation. Means getting bail in case of PMLA Act becomes very difficult because the court has to ensure that the person means applying for the bail, he is not actually guilty of the offense. So how it can be said in advance that the person is not guilty of the offense when the whole case is still to be tried? So that is a big hurdle how the court can form the opinion. And second, the court has to ensure that if he is given bail, he will not commit any crime while on the bail. This has also created a very complicated situation to the judges also considering giving or not giving the bail to the accused. So that is the very means irony in the PMLA Act. So we should be very careful about the provisions of this very draconian provisions and vast power of the ED given by this act. Now, I would like to conclude because I was already surpassed the time. But last note and last take away from the whole story I narrated about the cases of ED, I would like to quote one Sanskrit slok to all our CA fraternity friends, new or senior. We should be very honest in discharging our duty, and whenever we are dealing the case before the PMLA or in the office of ED, we must be very honest and very factual, because they are also having expert of the respective field when they are dealing any case or investigating any matter. So you don't think that you can manipulate or anything you can present some in one or other way. The fact is bound to come, and therefore we should be very factual and not evasive in evasive mode. One slok is there. Akratva parasantapam agatva khal mandiram anulang satamar yadi solpam apitad bahu. The meaning thereby, akratva parasantapam, किसी को दुख दिए बिना, means in the legal meaning, by not committing any crime. अकृत्वा परसंतापम अगत्वा खल मंदिरम, किसी क्रिमिनल के यहाँ जाए बिना, खल मंदिरम दुष्ट के घर जाए बिना, अनुलंघ सता मार्ग, जो सच्चा रास्ता है हमारा उसको छोड़े बिना, यद स्वल्पम अपितद बहु, जो भी थोड़ा बहुत है वो बहुत है हमारे लिए. वी शुड बी सेल्फ कंटेंट पर्सन, वी शुड बी सेल्फ सेटिस्फाइड पर्सन, वी शुड नॉट गो फॉर द शॉर्टकट, and we should deal all the cases whatever it may. It is not only that I am limiting my this topic to the ED cases. Even I told you CBI cases, in case of the police case also, other investigating agencies and other like income tax or GST, wherever we go, we must be very honest, we must be very factual in presenting the thing, so that we can build our image of our profession, and the truth will win at last. That should also be kept in mind. Thank you. I think, yes, you may be there. Hello.
Yes, sir.
Yes, I think I have done my topic. Now I can hand over the session to you for further action.
Thank you so much, sir, for this wonderful session and really enlightening us on various ED provisions, PAMLA, and other things. So we have few questions from our participants.
Yes.
The very first question we have is that, is LLB degree necessary for handling ED cases?
Yeah. Degree, there is no degree at all. What I told you, CA can appear before the adjudicating authority also, even before the ED, because we are literate person. We are professionals also, because somewhere in finance matter, chartered accountant can appear in the IT/AT matters. He can go to appeal also. In the same way, there is no any qualification required to deal the case or to appear before it. Just you should have knowledge of the subject, and whatever there some queries are being raised or some explanation are being called, you should be able to answer those properly and precisely. That is the only qualification.
Okay, sir. The next question we have, I think you addressed this already, but then still, I have a query. What's the statement taken by ED are admissible in court?
Actually, as per section 50 of the PML Act, you go through, the ED are not treated as a police officers. They are actually professional agency, you can say implementing agency, and the Supreme Court has also confirmed this view, that the statement taken by the ED, they are treated as the statement taken under section 164, means before magistrate, and they are fully admissible. one should be very careful, because whatever you have stated there in statement, that is going to be treated as a truth in the court. Suppose you go back or retract your statement, that can also create problem for you in the court, because retraction is not allowed, because what you have stated there, that is a proof for the court. So because of this, that means a statement is taken as a proof.
Okay, fine, sir. And one last question for this session, which I have with me is, sir, what is the main reason for low conviction rate in PAMLA cases?
Actually, what I told you, this is a very long procedure. You can say the this act suffered very heavy changes in the year 2009 and 2013, and the awareness about these cases, what I told you, now it is means changed scenario. Earlier, it was not so rampant, and it was not uh, ED was not having very big role. It was having role in the very extraordinary cases of 100 crores or so. So what I perceive, that the role of the ED has started very recently. You can say 9 to 10 years, and up to the conviction, because if there is a one court convict, then there is some other appeal is there. There may be appellate tribunal, there may be high court, there may be Supreme Court. So that's why I think, because of the long proceedings and the role of the ED very recent, it has come into play. So that is the main reason that conviction rate is very low.
Okay, thank you, sir. Uh, with this, I think all the questions which we've got are answered. And hereby, I thank all our speakers for the day. Gauravji, Dineshji, thank you for coming on this webinar. And also, I thank all the participants who joined for this webinar on this eve of Diwali occasion. But we had a good total registration of around 260 to 265 participants have appeared for this webinar, sir. And really, both the topics were highly needed in this time. So, thank you so much, and thank you everyone for this webinar.
Thank you very much. Yes.